I will give an overview of the background, the objectives of the project, talk a little bit about the changes that have been made, spending some amount of time on the topic of key audit matters, and then also cover a little bit about what we are hearing or what we have been hearing recently, recognizing that it's still early days and we are still a ways away from the mandatory effective date of the new standard, but we have seen some early adopters in a number of countries, and I can pass along to you a little bit of what we've been hearing from the stakeholders in those jurisdictions. In terms of the background and the history on the project, this project for the IAASB started all the way back in 2006. It started with some academic research that was commissioned globally by the IAASB and the United States AICPA, the American Institute of CPAs. And the results of that research were available around 2009. And I had been talking about the history of the project. I'll go through this fairly quickly. I mentioned that the start of the project was some globally commissioned academic research. The results of that research then led to the a consultation paper, which was the first global consultation from the IAASB in May of 2011. And that led into the standard setting part of the project. And there were two more public consultations, an invitation to comment in June of 2012, and then the exposure draft in June of 2013 that led to the final standards, which were approved by the IAASB in September of 2014 and were issued in January of 2015. So that is the background, and as you all may be aware, the effective date is for periods ending on or after December 15 of this year, 2016. Next slide, please, Kalina. In terms of the objectives behind the changes to the auditor's report, there certainly were a number of them. Probably the most significant was the call from users of financial statements and users of the auditor's report to enhance the informational or communicative value of the report. Starting with the academic research and through the public consultations, the IAASB heard very clearly from users that the auditor's report was valued, particularly for the auditor's opinion, but that the other more standardized aspects of the report did not carry much value for users. And users were looking for greater transparency into the audit that had been performed. Some of the other objectives behind the change, many of you have heard about the expectations gap over the years, the gap in terms of what users believe or expect an audit to be and what the auditor actually does. And one of the objectives of the change was to improve users' understanding of what an audit is and the auditor's responsibilities for the audit. Particularly also in the aftermath of the global financial crisis, there was a call not only for increased audit quality, but also for an increase or enhancement to financial reporting quality. And particularly with a concept like key audit matters, there was a belief that by focusing more attention in the auditor's report on certain important matters in the financial statements, that it would enhance the focus of preparers and those charged with governance on those key financial statement risk areas and the related disclosures. But the last objective, and a very critical objective, also in the wake of the financial crisis, there were many stakeholders that believed that the audit function had lost relevance. So a part of the objective of the IAASB was not only to increase the informational value of the auditor's report, but also to demonstrate the continued relevance of audit. Next slide, please, Kalina. This is a bit of a roadmap of the journey, as it were, for the enhancements to the auditor's report, starting with the UK had adopted some changes to its auditing standards and its corporate governance code all the way back in 2012, 2013, and that led to some changes to their auditor reporting model for the first time in 2014. Also, the Netherlands followed closely behind with a model that was much like the IAASB model, but incorporated some aspects of the UK reporting as well. And that commenced in 2014 as well for public interest entities in the Netherlands. I mentioned that the effective date of the IAASB standards is the end of 2016, but we have seen some early adopters in a number of countries, including Germany, Switzerland, Hong Kong, South Africa, New Zealand, Poland, and a couple of others. We were aware of at least one country, Zimbabwe, that had mandated dry runs, which basically just a test, if you will, compiling the auditor's report under the new standards a year ahead of the planned effective date. And of course, the changes to the auditor's report or enhanced reporting for all public interest entities in the European Union will come online in 2017. Next slide, please, Kalina. I mentioned the suite of auditor reporting standards that was issued by the IAASB in January of 2015. There were some changes to the extant or the existing auditor reporting standards, including the overarching standard ISO 700. Also some changes to ISO 705 on modifications of reports, ISO 706 on emphasis of matter and other matter paragraphs. Perhaps the biggest changes, however, were a new standard, ISO 701 on the communication of key audit matters, and I will spend a bit of time talking about that. Some changes, some important changes to auditor reporting on relating to going concern in ISO 570. I'll touch on that briefly. Also, a separate project of the IAASB was to revise the auditing standard on other information that accompanies or is included with the auditor's report. And essentially, I will not be covering much about that, but there is now a required section in the auditor's report when ISO 720 applies that communicates a bit more about the auditor's responsibilities for other information, as well as a conclusion, if you will, on the auditor's work effort. There were some changes to conforming changes to ISO 260 communications with those charged with governance. Essentially, the only requirement that changed in ISO 260 was to add a requirement to communicate during as a part of the planning and scoping of the audit to communicate significant risks to those charged with governance. And then, as you can see, a number of related conforming amendments. So indeed, a broad package of changes, important changes, and probably some of the more substantive changes in auditing in many, many years. Next slide, please, Kalina. To summarize some of the key features of the new auditor's report, responding to the input and feedback of stakeholders globally, one of the things that the stakeholders, particularly users, investors and other users, indicated was they would like to see the audit opinion appear first in the auditor's report. I mentioned earlier that investors clearly value the auditor's opinion and would like to see that presented first, followed by the basis for the auditor's opinion as well, and then the key audit matters and other aspects of the auditors and management's responsibilities. The key audit matters section, which I will go into in a fair amount of detail, the IAASB had some substantive discussions about the applicability of key audit matters and concluded that, at least initially, key audit matters should be required only for listed entities as that would be defined in any jurisdiction. Most of the feedback from stakeholders, particularly investors and larger investors, related to the financial statements and the auditor's reports for listed entities. So the IAASB concluded that that was the best starting point. I mentioned a bit about the additional focus on going concern, and I will touch on that briefly. Also have mentioned the other information section. The section of the auditor's report describing responsibilities of the auditor, as well as a statement on independence and ethical obligations. The responsibilities section has been quite enhanced. Again, I mentioned the expectations gap, and there were a number of stakeholders that concluded that in order to try to continue to address that expectations gap, it would be useful for the auditor's report to describe a bit more about the nature of an audit and about the auditor's responsibilities, and to try to do it using or avoiding the use of technical auditing language to the extent possible. So the responsibility section is a bit enhanced, and other stakeholders, in particular regulators around the world, ask for a greater focus on the auditor's independence responsibilities. So there is now a required statement in the auditor's report addressing the particular ethical code that the auditor is following relevant to that audit and compliance with that code and other ethical responsibilities. Finally, for listed entities, there's a requirement to name the engagement partner. For many of you, that will not be a new requirement in many jurisdictions around the world. It already was a requirement for auditors. But clearly is a new requirement in certain countries around. Next slide, please, Kalina. So what many believe to be the the biggest change, the most important change to the auditor's report is the section on key audit matters. Now, what are these key audit matters, or CAM as they're referred to? The ISO 701 defines them as those matters that, in the auditor's professional judgment, were of most significance in the audit of the financial statements of the current period. And importantly, these are matters that are selected from matters communicated with those charged with governance. A bit of history on key audit matters, going all the way back to the initial public consultation by the IAASB. There were some that had the belief that auditors could perhaps make more use of emphasis of matter paragraphs as a signpost, if you will, for important matters in the financial statements. Others, particularly investors, wanted a much longer description of the auditor's key judgments and response to critical risks of material misstatement, and some actually had advocated a longer form report, which some had referred to as an auditor commentary section. Key audit matters, as now concluded in ISO 701, essentially is somewhere in between, and I'll go into the specifics of CAM in a moment here, but they are required, as I mentioned, for listed entities. Law or regulation may require the communication of key audit matters or something similar to key audit matters for public interest entities, or some other definition that would be relevant in that particular jurisdiction. For example, the European Union and the additional auditor reporting that is now or will now be required for public interest entities there. And just a final point on this particular slide to mention that although key audit matters are required to be communicated initially only for listed entities, ISO 701 indicates that auditors may voluntarily or at the request of management or those charged with governance also communicate key audit matters. Okay, next slide, please, Kalina. One of the points of feedback to the IAASB, both in the invitation to comment, but particularly to the exposure draft, was that auditors would like to have a very robust decision-making framework for identifying and for communicating key audit matters. And that is what the IAASB did in ISO 701. There are a number of requirements, but there are many paragraphs of application material in that standard supporting the requirements. And essentially, the decision-making framework starts with matters communicated with those charged with governance, and then in a narrowing process, taking those matters and narrowing them down to the matters of most importance, starting first with the matters that required significant auditor attention during the audit, and then a final determination of the matters of most significance. So I will describe that in a bit more detail on the next slide. So, Kalina, if you could advance, please. Thank you. I mentioned that the first step and an important step supported by stakeholders was starting with the matters communicated with those charged with governance, but always thinking about certain aspects and considering certain aspects that likely would have required significant attention during the audit. ISO 701 has three required considerations as you see on the slide, the areas of higher assessed risks of material misstatement or any significant risks that have been identified. Secondly, significant auditor judgments relating to areas in the financial statements that require significant management judgment. Most often that would be complex accounting estimates that involve some key determinations by management, the use of critical assumptions and other judgments entering into the determination of their accounting estimates. And then finally, the effect on the audit of any significant events or transactions that occurred during the audit period. So in the next slide then, Kalina, the second step of the process takes those matters that required the most significant auditor attention and then using some considerations in the application material in ISO 701, finally determining the matters of most significance in the audit, which would be the key audit matters to be communicated in the auditor's report. The points that you see on this slide are taken directly from the application material in ISO 701. One of the main points of consideration is the nature and extent of communication with those charged with governance. Throughout the course of the IAASB's deliberations, it was clear that when the auditor is faced with a difficult or complex issue, audit issue, more often than not, there is a good amount of discussion both with management as well as the audit committee or the board, those charged with governance. And one of the key determinants of a key audit matter would be those matters that had the most robust discussion with those charged with governance. You can see a number of other considerations getting to the nature of the auditor's work effort, any difficulties in applying audit procedures or obtaining audit evidence, perhaps the involvement of auditors' experts, either internal or external, and certainly materiality also enters into this consideration. And it probably it goes without saying that any matter that has had a significant amount of discussion with an audit committee likely is a matter that is material or potentially material to the financial statement. Next slide, please, Kalina. Once the key audit matters are determined, the next question is how the auditor would describe those matters in the auditor's report. And the IAASB tried to keep this this requirement as principles-based as possible. So ISO 701 basically requires the description to include why the matter was considered to be a matter of most significance in the audit, a little bit about how the matter was addressed in the audit or addressed by the auditor, and a reference to the related disclosures, if any. For the most part, there's an expectation that key audit matters would relate to matters that are disclosed in the financial statements and perhaps elsewhere in a set of accounts or an annual report. But likely there would be some financial statement disclosures that the auditor could point to in the description of the CAM. In terms of how the matter was addressed by the auditor, again, the IAASB tried to keep this as high level as possible. The application material in ISO 701 indicates that this could include some combination of a short description of the auditor's approach, perhaps a brief overview of some of the important audit procedures that were performed specific to that particular matter or specific to that particular risk of material misstatement. And the ISO 701 provides for, but does not require, an indication of the outcome of the auditor's procedures or any other key observations with respect to that particular matter. Clearly there were some stakeholders, investors in particular, that preferred that the auditor actually come to a conclusion in the auditor's report on that particular matter. But the feedback during the public consultation, particularly from auditors, from accounting bodies, from member bodies of IFAC, from certain regulators and others, there was a concern expressed that by providing an outcome or a conclusion on a particular matter, that it may be perceived by users as a separate assurance, as a separate or piecemeal opinion on that aspect or a certain aspect of the financial statements. However, what we have seen thus far started in the UK with a couple of examples there. Auditors actually including the outcome or the findings, if you will, from their procedures in that particular area. And at least in the UK, there has been widespread support and acceptance by investors for that kind of a conclusion or an outcome. And what we have seen thus far in some of the early adopters in some of the countries around the world, there have been some that have followed that, I'll call it the UK model in including an outcome or observations on the matter. But I do want to emphasize that the ISO 701 does not specifically require that to be included. Okay, next slide, please, Kalina. Some things to keep in mind in terms of the description of key audit matters. What investors and other users said would be most helpful is to make the description as specific as possible to the particular company and to that particular audit. So as an example, if the key audit matter related to the impairment of goodwill, I have seen some examples where the auditor's description of the key audit matter has picked up on specific aspects of the company's disclosure about the impairment process. There may be specific reporting units or specific geographies where management's assessment of the impairment or the calculation of the impairment was more critical, or the assumptions going into the cash flow forecasts and other inputs to the impairment process might be a little bit more critical. And that is what investors have said they value, is specifically pointing to the areas of greatest risk and how the auditor is addressing those aspects. An ISO 701 does, however, indicate that the description should not in any way imply that the matter has not been appropriately resolved by the auditor, informing the overall opinion on the financial statements. Next slide, please, Kalina. In the IAASB's discussions about key audit matters, I will say that there was a significant support for any matter that had been identified by the auditor as a matter of most significance in the audit. So following that decision-making framework, if the auditor determined first that that matter required significant auditor attention, and then determined that matter to be one of most significance, there was widespread support for requiring those matters to be communicated in all instances. There were some situations, however, and I'll refer to these as sensitive matters. I'll give an example. In auditor, perhaps there was a suspicion of fraud or an illegal act during the audit, and the auditor had spent a good deal of time investigating the matter, working with management and those charged with governance, and perhaps at the end of the day, it was concluded that there was no material effect on the financial statements. Yet the auditor had spent a good deal of effort, and that particular matter would meet the definition of a key audit matter, one that required significant auditor attention and was the subject of robust discussion with the audit committee or those charged with governance. However, in a case like that, it's likely that there would be no public communication or disclosure of that matter by the company. So it was concluded by the IAASB that there needed to be a provision in ISO 701 for those rare circumstances where the auditor might determine that the adverse consequences of communicating a matter would outweigh the public interest benefits of that communication. The other example that was used was, for example, a financial institution where there had been perhaps some concerns about liquidity or going concern type considerations, and the consequences that might arise if the communication of a key audit matter was made for that type of situation. What I would tell you is that there's some very specific application material in ISO 701 that describes the process that the auditor would go through before reaching this determination that a matter that otherwise met the definition of a key audit matter, the auditor has decided not to communicate that particular matter. And it does involve significant discussion with those charged with governance and perhaps a representation from management as to why the company or management was unable to make a public disclosure about that particular matter. A couple of other aspects of ISO 701, and again, the subject of some extensive deliberations by the IAASB, but ultimately the IAASB concluded that key audit matters should be required when the auditor is issuing a qualified or an adverse opinion, but would be prohibited from communicating key audit matters if the auditor is disclaiming an opinion on the financial statements. And then finally, there may be some limited circumstances, a smaller entity with a limited amount of operations where the auditor actually determines that there are no matters that meet the definition of a key audit matter, and therefore there is nothing to communicate. In that instance, the auditor's report would include a statement to that effect. Next slide, please, Kalina. A bit about the relationship of key audit matters to emphasis of matter and other matter paragraphs, EOM and OM. The concepts of emphasis of matter and other matter paragraphs are retained in ISO 706, particularly the feedback from auditors of small and medium-sized entities from SMEs was that since there's not a requirement to communicate key audit matters, the auditors of those entities still need the vehicle for calling attention to certain matters in the financial statements, and the emphasis of matter paragraph is the vehicle, the current vehicle by which to do that. However, the ISO 706 has been revised to indicate that emphasis of matter and other matter paragraphs are not a substitute for communicating a matter that otherwise has been determined to be a key audit matter. So essentially, if a matter meets the definition of a key audit matter, if it is a listed entity, or if it's a voluntary communication of CAM, then that matter would be communicated as a key audit matter. Part of the revision to ISO 706 also is to specifically use the term emphasis of matter in the heading and of that paragraph in the auditor's report, and that is to provide the required differentiation to the key audit matters when they also are included in the auditor's report. Also, an aspect in ISO 701 is that any matter that gives rise to a modified opinion, a qualified opinion, or an adverse opinion, or a material uncertainty relating to going concern, those matters are by nature key audit matters. But the auditor would not describe those in the key audit matters section. Instead, following the requirements in ISO 705 for a modified opinion, those matters would be described in the basis for the modified opinion section, or if it's a material uncertainty relating to going concern, as we'll see in a moment, that matter is described in a separate going concern section of the auditor's report. Okay, next slide, please, Kalina. In terms of the auditor's documentation, essentially the baseline is still ISO 230. And the requirement to document significant professional judgments as a part of the audit. But in this particular case, ISO 701 specifically indicates that the auditor's documentation should describe why a particular matter that required significant auditor attention is or is not a key audit matter. To this point, in talking with some of the early adopters, more often than not, if a matter is determined to or is considered to have required significant auditor attention, that matter has been communicated as a key audit matter. But there could be some further filtering, in which case the auditor would need to describe why a particular matter that met step one, if you will, of the decision-making process for key audit matters has not been communicated in the auditor's report. Also, if in those limited instances when the auditor determines there are no key audit matters, the documentation should explain why that is the case. And I mentioned in those very rare circumstances where a matter determined to be a key audit matter is not communicated, the sensitive matters situation that I described earlier. Importantly, there is no requirement to document why every matter communicated to those charged with governance is or is not a key audit matter. It is only those matters that first meet the threshold of a matter requiring significant auditor attention. Next slide, please, Kalina. I will just quickly mention that in ISO 700, before the revision, there was a provision that when the auditor's report was required to be in a particular format in a jurisdiction required by law or regulation, and the auditor also wanted to make reference to the audit conducted in accordance with the ISOs. There were some specific minimum required elements of the auditor's report that had to be met before the auditor could, in fact, indicate that the audit was done in accordance with the ISOs. That provision is still there. The required minimum elements have been modified just a bit to incorporate some of the new aspects relating to going concern, to key audit matters, and a couple of others. Also, as has been the case in the past, if there are other reporting responsibilities in a particular country or jurisdiction prescribed by law or regulation or national standards, those can be included in a separate section of the auditor's report, or to provide some flexibility if they do cover the same types of matters as would be required by ISO 700, they can be included in the report on the financial statements, as long as the auditor clearly differentiates which of those matters relate to the other reporting responsibilities. Next slide, please, Kalina. This is just a very quick look at the most useful information that we have available, and that's the trends in the UK in terms of the number of, in this case, risks of material misstatement that have been reported. But we expect that the numbers would be the same applying ISO 701. And you can see here that in year 1 to year 2, the number of risks varied a bit by industry, but on balance, the number of risks or key audit matters that would be reported would be somewhere between 3 to 5 or 6. And that has held pretty well in the early adopter reports that we have seen. In most cases, there have been, again, somewhere between 2 to 5 or 6 key audit matters that have been communicated. Next slide, please. Perhaps not surprising, but the most common matters or types of matters that are communicated, in this case, these are statistics reported by the Financial Reporting Council in the UK, but I can also say that it's similar for the early adopter reports that we have seen under the new and revised IAASB standards. So either impairment of goodwill or other types of asset impairments, taxation and revenue recognition or other aspects of accounting for revenue have been the most significant. Also, I will say I've seen a number of examples of significant transactions, acquisition or disposition transactions, restructuring type of transactions, and sometimes for certain types of liabilities, litigation liabilities, for example. But just to give you an idea, And I might also mention that ISO 701 does not require a certain number of key audit matters to be identified. The IAASB intentionally left that to the auditor's judgment, but in practice, as I mentioned, both in the countries that have early adopted, as well as those countries that have their own enhanced auditor reporting, we have seen, as I mentioned, somewhere between 2 to 6 matters, and covering these types of complex risks or estimates or judgments relating to the financial statements. Next slide, please, Kalina. I mentioned earlier that there were some revisions to ISO 570. As background for this, I will indicate that particularly following the financial crisis, there were many stakeholders, investors, regulators, corporate governance organizations that were looking for greater transparency in the auditor's report about the auditor's responsibilities for and work effort relating to the assessment of going concern by the company. In fact, in both the invitation to comment and the exposure draft issued by the IAASB, the IAASB had recommended 2 very explicit statements in the auditor's report relating to going concern. One talking about the auditor's assessment of the appropriateness of management's use of the going concern basis of accounting, and secondly, that based on the auditor's procedures in accordance with ISO 570, that the auditor was not aware of any material uncertainty related to going concern. There were a number of concerns that were raised by stakeholders to those explicit statements. And for the most part, it related to a belief that the accounting standard setters also should do more in the area of going concern to eliminate some of the what exists today, some confusion in terms of some of the existing terminology or thresholds for disclosure. For example, the ability to continue as a going concern, or the threshold for significant doubt, the threshold at which a material uncertainty would need to be disclosed. And the stakeholders said the auditor shouldn't be making any explicit statements in the auditor's report until some of that confusion is first addressed by the accounting standard setters, the IASB and others. So the IAASB is continuing to liaise with the IASB and other accounting standard setters around the world. But in the meantime, ISO 570 does have a new requirement, and that's in situations, as you see on this slide, where the going concern basis of accounting is appropriate and there is no material uncertainty related to going concern, but there may be some events or conditions that had been identified and evaluated, and particularly if there are some required disclosures by the accounting framework relating to those underlying risks or uncertainties. It's a requirement for the auditor to evaluate the adequacy of those disclosures in accordance with the financial reporting framework. And also, there's a mention in ISO 570 that when there is what's referred to as a close call, some events or conditions for which there was some significant discussion with management or those charged with governance, about the whether there is significant doubt, but ultimately concluded that there is no material uncertainty. The auditor may, in fact, decide to communicate about those underlying events or conditions as a part of the communication of key audit matters. And also in those situations now when a material uncertainty does exist, under the, I'll call it the old ISA 570, there was a requirement for an emphasis of matter paragraph. That has now been replaced in ISA 570 revised with a separate section of the auditor's report with a very specific heading, material uncertainty related to going concern, that would now take the place of that emphasis of matter paragraph, unless the EOM is in fact required by national law, regulation, or auditing standards. Okay, next slide, please, Kalina. To wrap up here, just a bit about what we've been hearing, and this speaks to those countries I mentioned earlier where we have seen some early adoption of the new IAASB reporting standards. Just to point out a couple of these important points, there has been a perception by stakeholders in those jurisdictions that there is an enhancement to audit quality, that the auditors are a bit more focused on those matters, the key audit matters, the areas of most importance in the audit, and working more closely with management and those charged with governance on the related financial statement disclosures for those matters. So not only has there been a perception of an increase in audit quality, but also just an overall perception of the relevance of the audit, and the perception of the auditor has improved because of the additional transparency and that's been provided about the audit in the auditor's report, and as well as some of the additional communications of value for users, key audit matters in particular. Also, what we have heard is that even though there's always been, in most cases, good discussion and a good interaction between management and those charged with governance and the auditor, the enhancements to the auditor's report and the related process now is actually improving the engagement or the interaction between the parties into the audit process. Next slide, please, Kalina. The next 2 or 3 slides here will give you an idea of some of the more specific feedback that we've heard from certain of the stakeholder groups. Investors in particular have very much welcomed the additional communications in the auditor's report. A specific quote that the auditor's report has now become a valued new source of information about the audit, because it is something that the users can actually read now to gain a little bit more insight into some of the critical aspects or the key aspects of the audit. I also would mention that even though key audit matters that communication is only required for the current period, there were some concerns that had been raised that in subsequent years the communication would cover the same matters and would therefore become either more standardized, more boilerplate, and perhaps less informative for users. And we are seeing two things, starting with the experience in the UK. The first is that auditors are, in fact, looking for ways to add some creativity or to innovate their auditor reporting in subsequent years. And even though there may be the same matters that have been reported, auditors are looking for ways to either differently describe those matters, a different presentation style, or perhaps to more specifically pinpoint some of the description to more specific aspects of management's disclosures. And investors have said, even though the same matters might be addressed year after year or year over year, it actually provides relevant information for them, because it shows that the auditors are continuing to focus on those areas of importance that also are important to users. Next slide, please. From the side of preparers and audit committees, there still is I guess, an open question as to whether this, in their minds, as to whether the additional information will be valuable for investors. I think what we have seen in practice in the UK and in some of the early adopting countries is that definitely investors are finding that information to be valuable. But we have heard direct comments from some audit committee members that the communication with the auditor has significantly improved, even above the very good level that it was at previously. And it has had really no effect on the candid nature of those communications with the audit committee. Next slide, please, Kalina. And finally, what are we hearing from auditors themselves? And essentially, we're hearing that this is a significant change. It requires planning. It requires early and frequent communication with those charged with governance in particular. What auditors have said is it is a change because oftentimes the actual audit process, the description of how the auditor has responded to a risk in a particular area, has not been written with the intended inclusion in the auditor's report and for public consumption, if you will. And so it does become more important for the auditor to think about the description of key audit matters and, as indicated here, writing with the audience in mind, and particularly what might be important to investors and other users of the financial statements. And as noted on the bottom left here, additional quality review processes likely will be put in place by audit firms, so that will require additional planning and starting early in the process. Key audit matters is not something that should wait until the end of the audit for the audit team to address. Next slide, please, Kalina. I will close with just one final point here, and that is this is a quote from a publication that was developed by the Chartered Accountants Institute in Singapore and the ACCA, and I think it really describes the situation for auditors in terms of thinking about the change in auditor reporting. That the train has left the station, destination is increased transparency, and the only choice is to get on board and ensure that everyone pulls together and makes it work. It is an effort that will involve both management and those charged with governance, as well as the auditor. So early and frequent communication is the key. And Kalina, I do think that that is all. There's one slide that points to a site, the IAASB's website. There's a separate section dealing with auditor reporting. A number of publications supporting implementation have been developed and are available there. And the IAASB implementation working group, which I continue to chair, will certainly keep thinking about other materials to aid implementation, and we'll add them to the website as they are developed. So with that, Alina, I will stop. I thank everyone for their time and attention, and we'll look forward to answering any questions later.
Thank you very much, Dan. Before I pass over to Gerhard, let me just remind everybody to stay with their microphones switched off, and also their muted buttons if they're joining via WebEx. Let me pass now to Gerhard. Gerhard will talk about the CAM, the new audit report, but we'll take a practitioner's perspective, bringing some examples and some commentary on these. So Gerhard, let me pass over to you.
Well, thank you very much, Kalina. Well, good afternoon, actually. Good afternoon to everybody, to you. As Kalina already said, I will bring some practical examples. Some of the slides, what I have prepared, well, I could say they are not redundant, but we will skip them because Dan touched upon that. They might go a little bit deeper than what Dan said. So some slides are maybe double. I will talk about the reporting models. I will talk about examples, good examples, bad examples, especially what changed from the first year of experience in the UK to the second year. And I will also show some changes, especially when the auditor changed and so on. And I will also maybe talk a little bit about the experience, what we have right now in Austria with this. And I will focus, of course, in any comparisons more on the European Union, of course. Okay. So the next slide, Dan already showed. It's an overview of the content of the new opinion, actually, of the new report. Starts, as Dan already said, with the auditor's opinion, then the basics for opinion. What we see here in Austria, what triggered some discussion was the new model of ISO 570, the material uncertainty regarding going concern, if any. So this, as I said, triggered some discussion here, especially when has to be that included now, what do we write and so on. And we will have some guidance for our local profession on how this should be handled in respect to ISO 570, and also because we have a requirement according to the local law that we have to report about material uncertainty, so how these two can be brought together. The emphasis of matter paragraph, Dan already mentioned, then of course the key audit matter, and also how the key audit matter relates to the requirement what is coming from the European Union. The other matter paragraph, Dan also already mentioned that. The discussion what we have in Austria is more or less, is this now a given structure? Do we have to really adhere to the structure? Well, we heard that we have to begin with the auditor's opinion and the basics for opinion, but then is it pretty much on the discretion of or at the discretion of the auditor how to group them? Those paragraphs or so. Actually, we decided in Austria we go how the IAASB says, and so we will have the grouping as we have it here. Next slide, please. The responsibility for the financial statements. What triggered a lot of discussion in Austria is the new requirement that, I mean, there was no problem that management was responsible for the preparation of the financial statements, because we have that in the Austrian law, of course. But what triggered a lot of discussion, and we will see how this will be received in practice, is actually that also those charged with governance, so the supervisory board mainly in Austria, is different from management. So it has to be mentioned in the auditor's report now, and we will see how the supervisory board, those charged with governance, actually will react to that. We are right now already in the process of going to the audit committees and telling them that, hey guys, you are in the auditor's report next year. So this could trigger some, as I said, additional discussions maybe. Auditor reporting responsibility, yes, this I will come to that a little bit later. Date, address, and signature. Dan mentioned it, that the name of the responsible auditor now has to be included, at least for listed entities. Well, this never was a problem in Austria because we all already signing with the name, so the responsible auditor is known, so that's nothing new for us. Next one. Okay, those the next slides actually we can pretty much. We have a problem.
Just a second.
Okay.
Okay. I have control.
Okay, so the next 2 or 3 slides we can actually skip, because this is the interaction between the modification of a report and the material uncertainty relating to going concern and any kind of additional matter coming out of ISO 706. Dan mentioned that already, so we can skip this. We can also skip this. This goes a little bit into more detail about the 2 types of paragraph, emphasis of matter and other matters. Next one. This is about the key audit matter and the modification and the material uncertainty. So as Dan already said, ISO 705 and ISO 570 always comes first, and then of course the COM section, okay? So the next slide shows you now how the reporting model compares. I included here the ISB model. Then the PCOB. PCOB issued a new proposed standard in August now this year, just shortly, last month. The UK, as already mentioned, has now already 3 years of experience. And then the EU audit regulation will come into effect in 2017. As Dan already mentioned, it's not only for the listed companies, but it's also for PIEs. There was a discussion in Austria to extend that. We have a special type of company in Austria, the so-called super large or very large companies. So there was a discussion to be required. There's a requirement also for those companies, but finally it got not through the legislation. Dan mentioned it is the bullet point description of the outcomes of the findings. As ISB only has a guidance to that, the PCOP will not require it. It is not a requirement, as Dan mentioned, in the UK, but it is a lot of, as you will see later on in the examples I will show you, that actually it become common practice in the UK, and it will be included with all the remediants, what Dan mentioned of a piecemeal opinion and all that stuff. There is a requirement in the European regulation if it is relevant, so if the auditor thinks he has to report that, then it is required about the outcome and the findings. Next slide, please. Also here you see the conclusion regarding the going concern, the changes, what is coming. There is no change in the European Union with respect to the existing model. The statement regarding the outcome of the auditor's consideration of other information. Here we have somehow a discussion in Austria, because we normally, we talk about the annual report here, what normally listed companies prepare in Austria. The problem is, what we have in Austria is that most of the time this annual report is prepared after we have signed the opinion. So the ISO 720 has here a certain requirement how the wording should be when the auditor receives the other information later on. We discussed that in our board, and it is somehow, well, we're not very lucky, or well, we're not very happy with how the IWSB has formulated that, because we have to say, well, when we will receive the other information, we will read it. And then if we have something to report, we'll report it to you, but we can't report it now because we don't know yet. So it's somehow a little bit difficult, especially when you receive it later on. Okay, the identification of the engagement partner I already mentioned. There is the disclosure of the year the auditor began consecutively serving the company's auditor. This is a requirement in the EU regulation. This is because of the rotation rule, what we have now in Europe, so that everybody sees how long you have been an auditor and when you have probably to rotate. Okay, so let's go now to some examples of COMS. And I start with COMS, actually, I want to call it the first attempts of COMS. This is from a PwC report of the TUI Travel PLC in 2014. And actually those two camps, what you see here, the revenue recognition and the risk of management override of internal controls, well, these are you could say, the generic risks which are included in ISA 240. So everybody actually has those two risks, significant risks. They have to be, although as you know, revenue recognition is a rebuttable presumption, but still, normally in listed companies, it should be, of course, a significant risk, and significant risks probably also are key audit matters. Also, how they are addressed, when you read that, it's very generic, it's nothing special. We challenge the key assumptions and judgments made by management and calculation, including whether the group has entitled and so on. We tested manual journal entries, so it's very, very generic. You could actually use those two for every company. It would apply for every legal entity, for every listed entity. So just let's go to the criticism, what we got. Generic description of both the risks and the responses. So actually what did those two tell us? Nothing. The key audit, another key audit matter example, next slide, is from the TUI Travel PLC. It's about the pension liability. It says we challenged, where is it? Yeah. In the overall context of the group balance sheet measurement and liabilities requires judgment by management in choosing appropriate actuarial assumptions. Changes in key assumptions can cause a material change, but what kind of key assumptions are there? Again, how it was addressed, the key audit matter in the audit is not very specific, and the criticism you can see on the next page. First of all, there's no cross-reference to the related note in the disclosure, so there is no indication what the significant judgments and the key assumptions were, and also the description is quite generic and could apply, as I said before, to any entity, and the description applies to seek inputs rather than evaluating inputs, so this description is also not a very good one. The last example what I show you here is from another report. Maybe it's not really legible, but the most important things are what I circled here down in red. This is again from a first-year report. It's not from PwC, it's from somebody else. Our findings, our tested identified weaknesses in the design and operation controls in response to we assessed the effectiveness of the group plans for addressing these weaknesses, and we increased the scope and depth of our detailed testing and analysis and so on, and then mildly cautious resulted in a mildly cautious profit recognition. The partner who wrote that actually got very famous in the UK because of these conclusions, what he had drawn in this key audit matter in the findings section. As I know from the reactions, it was very much welcomed on the part of as Dan mentioned, also on the part of the investors and the user side, but he was very, very much criticized, not only within the firm where he is coming from, but also from the other big four. There was a big, as I said, a big concern about these, and you could really call it, as Dan mentioned it before, it's a piecemeal opinion. So what is the final opinion where we talk about a true and fair view is actually good when in the key audit matters you give an opinion. So as I said, it triggered a big discussion on if those kind of findings should be included. As Dan mentioned, IWSP does not require it, and the EU only requires it in certain circumstances. Okay, next slide please. Dan mentioned already that the extended auditor's report, the review of experience in the first year. This is the publication of the Financial Reporting Council in the UK, and there are a lot of practical examples in there, and we will go through that a little bit later. Coming out of that, PwC actually, because we were pretty much criticized, as you can see about this before, we had very generic risks in our key audit matters. We had very generic descriptions and so PwC actually went back, and now I want to give you some hints and maybe tips how to write this report, how to write the key audit matters, and it's especially for auditors, of course. And Dan mentioned it also, begin with the end in mind. What does that mean? Well, the auditor has actually at the beginning of the audit, at the beginning when the audit process starts and when the communication with those charged with government starts, the auditor already should have in mind what might be the key audit matters and how would they be addressed. Anticipate the time involved. Dan mentioned that already. This is really of big importance. As the example from the UK showed that, especially in the formulation and in the writing of the report, and what we learned from the UK, it is partner time. So the partner has to write the report, not the consultant, not the manager, not somebody else, the director on the engagement. So it's really partners' time involved is very important, and it takes some time to write the CAMs and to have the right wording. And also what Dan mentioned, of course, it's not only that the audit team, the partner, prepares the CAMs and that's it. So they have to go through certain iterations and to certain review process. Maybe you have to include some consultants, some IFRS consultants or whatever about the content. You definitely should involve risk management of your company in formulating and writing the report, and even you have to include maybe the lead management of your practice in writing the report. Management and those charged with governance are keenly interested in the report. This is what Dan mentioned, of course. They are very much interested, so you have to communicate with those charged with governance on time. So we right now do it already in the first meetings, like in September now, or October, when we have the meetings with the audit committee, when we present how the audit will go, when we present the key risks, when we present the audit time plan. And so we talk about what will be the CAMs, what will be included in the report. So actually I only can say start very early in the audit process. You cannot, as Dan mentioned, do it in January or February, a week before you issue the report. Getting the descriptions of the key audit matters right is a very challenging task, absolutely. There has to be a good sense of which are, as Dan mentioned before, when you go through the process, when you look at what could be a key audit matter, what has to be addressed in the audit specifically, as Dan already mentioned, it must be different from entity to entity. It cannot be, as I showed you before, the generic risks of ISO 240, of management override of controls. The criticism with this respect was, well, don't tell us about management of override of controls. We know that this is key, investors say, we know that this is a key risk. So why do you address it? It is clear, so don't tell us. Tell us what we don't know. Write with the audience in mind. This is what Dan mentioned already. So, and I have another quote, what we always use in PwC actually. A good report is one where you can cover the name of the company and still be able to tell what industry it is, and even more, maybe even which company it is. I mean, I think this is quite a challenge if you really should be able to see from a CAM what kind of of company that is. Okay, now let's go to some really examples how to write the CAM, what you should do, what you should not do. First of all, tense and style. Use the past tense. So used, we checked, we obtained. Do not say we check and we obtain, because what does it mean? We obtain or we check. That means actually you do it right now, but it does not mean did you do it or will you do it, or it's a language problem. So you always have to use past tense, so that means that you have to done it. Be very specific, avoid hypothetical statements. We used reconciling items or obtained instead of a phrase like where differences were we identified and so on. So be really specific, use, as Dan already mentioned also, use plain words so that everybody can understand it. Avoid technical terminology, of course. I mean, users normally are knowledgeable of what we are talking about. They know about the technical terminology, but don't be too specific. Really try to avoid especially client-defined terminology. Avoid boilerplate, we talked about that. Avoid general statements like there are inherent assumptions. Well, of course there are inherent assumptions, but be specific about what kind of assumptions were used, like what we saw before, the actuarial assumption with the pension accrual. So be specific what kind of assumptions are used. Also, next slide please. Avoid be validated, for instance. There were examples in the first year in the UK where all these, what I show you here, actually came from examples which were actually used. Okay, so we validate it. Don't use validate, because we don't validate any management numbers. We insured, we test, we insure. Don't use that word, because we cannot assure anything. We give an assurance in our report. We say it gives a true and fair view, but we don't assure anything. As I said, we assure, we obtain assurance, but we don't give assure. We reviewed. I mean, you could never use in a CAM we reviewed. As we know, there is a special review. A review is something different. Review, there is a specific standard from the ISP, and everybody knows actually what a review is. So we never use reviewed. And of course, don't use in our opinion. And our opinion is in the opinion paragraph. So don't use it in a CAM. And of course, obtain, we support to support management assumptions. We never support any management assumption. We have to challenge management assumptions. So we don't support management assumption. So the last slide on that is what I said already, reasonable. We shouldn't use reasonable. I will show you some examples afterwards again. And comfort. We don't obtain comfort. Although that's a common word what we use actually in our terminology at PwC. We always try to reach comfort, but we never obtain comfort. We obtain evidence about a matter. And also what we should not use is like we tested all items. Well, in only very limited actually circumstances is that we really tested all items. Normally we only take samples and we never test all items. And we found a balance to be reasonable. Again, we should not use that. Okay, so let's go now to maybe some better examples. This is another example of a key audit matter of TUI travel, the risk of fraud in revenue recognition, so a little bit more specific, and it's a much better description than we had before. You can see C note 1 in the financial statements for the director's disclosure, so there is a reference there so that we can find it. Next one. Yeah, you have the reference. Then the identified risk. We focused on the recognition and revenue because there is a significant difference between the timing of a receipt of a cash from customers and the subsequent recognition of the revenue. So we stated there, and you see there what is the reason why there is a risk, and so there is a risk of fraud in revenue recognition in this entity possible. And then how we addressed it. We also worked out the last paragraph in how we addressed it. Our work is also included testing a sample of manual journal entries which did not identify any items, and we could not substantiate it. Okay, so let's go now to a full report. I show you the W.M. Morrison Supermarkets PLC report. Especially what I want to address here is As I said, this is a full report. This is a full UK report, and there are also some specifics of a PwC report in there. And I want to show you what is not required, especially for the European Union, what we do not have to include. Okay, so we start with the report with our opinion. I mean, that's clear. This is how Dan said. We have to start with the opinion, and then there's the next section is what we have audited. In Austria, actually, we will do it the other way. We will start what we have audited, and then we will talk about the opinion. But that's not so important. That's a minor change maybe. Okay, then the next one. This is actually PwC specific. This is like a table of content, a directory for the auditor's opinion. We always show this overview. We always start with the materiality, so we give a short description about our materiality. I will come to materiality a little bit later. Then we talk about the audit scope, and then we talk about the area of focus. Area of focus actually is the UK name for key audit matter. So key audit matter is the language of the IWSP. Area of focus is used in most of the UK reports. In the EU regulation, there is neither one of those two names. It's something like areas of special risk or so. And at least we, for Austria, decided we use key audit matters. Well, of course, we use the German translation for that, but it would be the key audit matter. Okay, the next one, as I said, the scope of our audit and area of focus. This is not in the IWSP. It's a UK requirement. It's not in the it's not in the ISA. It's not in the EU regulation also. And it was in. We discussed it in Austria if we should include those kinds of descriptions in Austria. But the decision right now in the profession is not to use it. So we will see if maybe one of the auditors will use it. So, but right now, as I said, the profession actually says we should stick to ISO 700 and not add anything else. Okay, the next one is the first CAM, commercial income and promotional funding. I will not go with you through this CAM because it would be a lot of reading. I only want to point out we start with the reference. This is the typical PwC format. You always have on the left side the area of focus, and on the right side how it was addressed in the audit. We start with the reference where you can find that in the notes in the annual report, and then we give the description. And also, if it is possible, of course, we distinguish in between our address section, like what we did in control testing, what we did in the income testing, and what we did in the balance sheet testing. And on the next slide, it is continued, and also you see what with relation to the disclosure. Okay, let's continue, please. The next is the impairment of property, plant, and equipment. Again, as Dan said, you can see here, these are, not that it is generic, but these are really the CAMs which are used very often in the UK reports. Also, it is addressed here in the W.M. Morrison report, the impairment of property, plant, and equipment. Okay, so please continue. So again, here the area of focus, how our audit addressed it, and so on. The next one is about leasing, onerous lease provisions, and onerous property commitments. There is also this discussion. What we had internally is that are there specific CAMs with respect to branches, for instance? This is a supermarket, and are there specific, as I said, specific CAMs what you could or what the investor would expect in a report for, let's say, a supermarket a company? And of course, in a supermarket company, leases and with respect to the outlets, and of course are very, very important, and property commitments, what the company might have. So you might be interested to know what's going on with respect in this area. So this is then also a CAM. Okay, then capitalization and impairment of intangible asset. Of course, this is in many companies a very important and maybe a significant risk, and therefore could be a CAM, especially when we talk about intangibles coming out of acquisitions. And so this is addressed here. And as you also can see here, we talk about big numbers here, 520 millions, and so this is quite a significant number. Stock valuation, the next CAM, of course, for supermarkets, very, very important area, and so this is also a CAM. Okay, the next one. How we tailored the audit scope. We talked about the audit scope. Now let's talk about materiality. Materiality is a requirement in the UK report, so it must be included. The only thing what has to be included, as you can see here in green, the overall group materiality. As you know, you're all auditors, well, most of you guys are auditors, that there is also the performance materiality, and there is this clearly trivial coming out of ISO 450, this clearly trivial amount, which is actually here indicated, is the last sentence. We agreed with the audit committee that we should report to them all individual items identified during our audit above £875,000. Well, this is, for most of the companies in Austria, this would not be clearly trivial, but we talk about here different sizes, of course, and as well as misstatements below that amount and so on. So actually, what PwC does here, we indicate the overall materiality and we indicate this clearly trivial number. We do not indicate the performance materiality. It is described how it is determined and the reason for the benchmark applies. So this is actually a benchmark, how you should do it. As I said, the discussion goes about also to indicate the performance materiality. As far as I know from this report of the FRC, there's only actually one Big Five who includes also the performance materiality in the description of the materiality. All the other auditors, not only Big Five or Big Four auditors, but also the other auditors only include the overall group materiality. We had a discussion, well, it is not required by European standards. We discussed it in Austria, if we should include it. And there was the clear decision in Austria again, no materiality. Although, as you might know, there is this special report to the audit committees, which comes out of Article 11 of the European Union regulation. And in this opinion, in this special report, the materiality has to be indicated, so the company actually knows what our responsibility is. So my personal opinion is actually, if we tell the audit committee and management, so why shouldn't we tell the public what materiality is? And as I know from reactions also from the UK, from the public, from investors, they really love it and they like it, and so why shouldn't we not include it? Okay, the next slide, please. Yeah, this is the going concern statement, other reporting requirements. This is really UK specific, so this comes out of the Companies Act and so on, so I don't want to go into detail with that. There is one thing, is the first sentence under going concern. Under the listing rules, we are required to review the director's statement set out on page so in relation to going concern. We have nothing to report having performed our review. We also discussed that in Austria if we should include like this negative statement that if everything is okay with going concern, that we also state that there is everything okay with going concern. And there was the decision in the Austrian profession not to include a negative statement about that there is everything okay with respect to going concern. Okay, the next slide we can skip again. This is a special UK requirements, director's remuneration and so on. Okay, then the responsibility of the financial statements and the audit. as Dan already elaborated before, especially the responsibility of the auditor is much longer in the IWSP ISO 700 report. So this will be much longer also in our report, what we will going to use in Austria. Okay, so then just one example what I wanted to show you here is, and here, the next one please, is I want to refer you to, this is a CAM about effectiveness of internal control. And when you look at the reference, it says reference, refer to page 75, and within the audit committee report. I mean, this is a special report which the UK has to prepare. So we will not have that in Austria. We don't have that in the EU regulation. So why I want to point that out is because there is in ISO 701, and this is the discussion what we had in the profession also in Austria. Well, and with respect also to what Dan said before, that it should only be actually very seldom that there are no key audit matters, or that we say no, it's we don't write it because of what ISO 701 says, that we don't have to write it. So because there is the requirement, or it's not the requirement, but it is stated in ISO 701 that we, the auditor, should never talk about original information. What is original information? Original information is about the entity that has not been otherwise made publicly available. So we always should talk about, and always the reference, what we do in CAMS should be to publications like the auditor's report, like the management report, or whatever. So, because we discussed if it is possible to have a CAM like that in Austria, to talk about the effectiveness of internal control. Well, of course, I've never seen an report, financial statements actually, where management says about anything about the internal control in of course in the notes, and there's also not the requirement. Well, there is a requirement to talk about the risk management system in the management report. So this might be a possibility to give it a CAM like that in Austria and in the EU also, because we don't have this auditor committee report. Okay, then I want to come to this extended expert. As I said, the UK already has it in the second year, and now in the third year. So they issued, the FRC issued in January 2016 an extended auditor's report, so a second, the second review, a further review of experience. What was covered in this report? Well, in the first year they covered 153 reports. Now they extended it actually to 278 reports. The FRC, before they prepared this report, they engaged with investors, they engaged with the major audit firms, they hold roundtables, they had discussions, they reviewed other relevant publications, they reviewed academic analysis, and so a lot of input went into this second report of the FRC. What was the focus? The focus of the review was the audit risks, how they were addressed, what kind of audit risks. And Dan showed this one table in his presentation about the change in the audit risk from year 1 to year 2. The focus was already, as already mentioned, on materiality, how it is addressed in the reports. Also on the audit scope, and it was very important because there were already some changes of auditors from 2014 to 2015, and the FRC especially placed the focus on that to see like how the CAMs changed, how the risks changed, and how the new auditor somehow even referred to the old auditor or not. And then the last one was the going concern basis of accounting and the viability statement, what has to be addressed under UK regulations. Here is, for instance, a sample from an auditor's report about the changes from prior year. This is was said. This is actually already FRC said. This is best practice, so it should be. This is the way how you should address that. Let's see on the 4 bullet points. At December, the balance of assets held for sale. They said it's no longer significant to the group. So actually, it is not anymore a focus of area for the audit, and they removed it therefore from the audit. The next one is the deterioration of the economic situation continued in the group's main area of operations, has increased like from a potential impact to another risk. So this led us to increase the focus on this area and to increase so the audit work what was done here. The third one was about a new area of focus. It was about the Russian ruble because of the significant devaluation, and with respect to this company, this was then a significant risk and must be reported, and was also included then in the camps. And the last one is also again a new focus area about segmental reporting, which was not addressed in the last year. So as I said, this was to be considered as a best practice, how you should, how the auditor should report the changes in audit risk from last year. Again, what you can find in this report about language. So the FRC says, well, language is always a problem, and language is still not how it should be, and we have still some examples where it is too generic and too the words are used which should not be used. I focused here on PwC examples, so not to address and to point the finger on somebody else. So that's why I used always PwC examples. No, the first one is from EY actually. This is, you see, the reasonable alternative assumptions. As I said before in the hints how to write a CAM, reasonable is not really a very good word. Then you have 2 examples from PwC, Independent Auditors Report, and here I want to point out the wording. Possible outturns is broad. I mean, well, this is generic. What does it mean, broad? Possible, well, whatever that would be. So was again very much welcome by FRC. In the last sample, in the last example, and an example of the next page, I want to draw your attention to wordings. What actually PwC looks like it very much. And this is in the 4th line here. The assets acquired even after significant downward adjustments were applied. So we were criticized, what does it mean, first of all, significant, and what does it mean, downward adjustments? On the next page, it is used in a slightly different way. It says here, again in the 4th line, by reasonable assumption that would require significant downside this time, not downward, this time downside. So again here, this is not the language what should be used. And actually PwC issued, as you can see in the last statement here, its own report of an analysis of CAMs and analysis of reports. It's called the Revolution in Audit Reports from August 2015. And PwC says here, all those we spoke to agreed that having the results of our audit work included in the audit report was helpful and informative. That said, we still have further to go in terms of using more clear and consistent language and being definitive about whether or not we have a concern. Okay, let me summarize what I have just talked about. First of all, what Dan already said, very much, and this is really the outcome, the investors really welcome the extended auditors reporting and greatly value the enhanced information it provides. This is a citation from the FRC publication, what I showed before. What the FRC now tends to do, of course, FRC right now is in the process of reviewing their type of ISOs, the UK and Ireland ISOs. This is a UK and Ireland ISO is the transformation of the IWSB ISOs into UK and Ireland regulation, and FRC right now is in the review of those ISOs, especially with respect of the EU reform, especially of the EU audit regulation and the directive, what comes out of that, what the EU, well, we don't know if they actually will follow them now after Brexit, so we will see. At least this statement was before the Brexit, so it will be a very interesting development what we will see in the FRC, if they will still follow now the EU regulation or not. What does it mean for us, of course, in Austria and also in other parts maybe of the EU? The implementation of the new ISOs, this is now very, very important, and also the implementation of the EU audit regulation and directive. With respect to the last point, we are already pretty much finished in Austria. We have done almost everything. There are still some small parts left what we have to implement. We missed the deadline, we know that, but politics are sometimes very, very slow. With respect to the implementation of the new ISOs, I just want to tell you what the status in Austria is actually about that. We changed to ISOs by the mid of the year, and we have introduced a kind of endorsement process. That means we have to review all the ISOs. When we say we, I mean our professional body. We have to review all the ISOs with respect to, is there a problem with Austrian regulation and with Austrian law, for instance? And if there is no problem with respect to the Austrian laws and regulations, we endorse the ISOs. And actually it was last evening, actually yesterday, our professional body had a meeting and we endorsed all the new ISOs, and we endorsed also, and we actually approved a new auditing standard for Austria, which is in addition to ISO 700, just to as I said before, just to transform the new ISOs into Austrian law and regulations. Okay, that's from my side. Thank you very much, and I'm looking forward to your discussion and your questions now. And I give back to Kalina.
Thank you, Gerhard. Very interesting examples and your commentary. We see that there is a process of learning and evolution in this implementation of the early implementers and so on. Before this session, we had a short survey among the participants and the members of the community of practice of the audit training of trainers workshops. And we got some feedback on a few topics, which I would like to share with you now very briefly, and then I will open the Q&A session. So one of the questions we asked is, what actions are taken in your respective countries to improve the readiness of the profession to apply this new standard? Most of you, as action, said that there's a lot of CPD training courses either delivered or are going to be delivered very soon. Translations of the new and revised audit standards into local languages are ongoing. A lot of guidance and resources, mostly translations of IAASB guidance, are also taking place. And a lot of awareness raising by the PAOs, like newsletters, bulletins, website announcements, announcing the big change to happen this December. Regarding the state of readiness, some of the implementing actions are a bit lagging. For example, it can be observed that most of the CPDs are planned for at the end of 2016 or even 2017, which means that auditors may be receiving this training a little bit late. In terms of outreach events and awareness-raising sessions, these are very few. Very few PAOs are planning to organize sessions with regulators, investors, the business community to discuss the new implementation arrangement and the benefits, and to promote awareness regarding the new and revised auditing standards. And no reports came back about some early field testing. As far as the second topic that we asked participants to provide input, it related to what impact you are going to expect in your countries from the new and revised audited reporting standards. And here are a few that you said. One was that partner hours are expected to increase, especially in the first years of implementation, because there will be a learning curve effect, and which is associated with any new requirements and standards. On the other hand, audit fees are not expected to be affected. There is also an expectation that auditors may be more exposed and challenged by various stakeholders. And this is particularly because there is a feeling and perception that the capacity of many stakeholders in your respective countries, tax, regulators, public, may have a difficulty to understand differences between a key audit matter, an emphasis of matter, other matter, and these requirements are anyway quite technical. As a last point to mention, there was also expectation that SMPs who do audit some listed companies in your countries are expected to encounter implementation difficulties, especially in the first years, and that more capacity development opportunities are should be present. So coming back to the third topic was some questions that you sent forward for Dan and for Gerhard. I have summarized them in a few areas, and let me start with the first one, which I received from a lot of participants, a request to ask this question. Then you spoke about the AWSB resources and examples on camps. Gerhard, you also mentioned some PwC guidance. But I would be very interested now if you can share with participants a little bit more where they can find good sources, or maybe sources that you use yourselves to educate in this field. Can you point out to some practical guidance materials or some areas where participants can gain more insight? So let's start with Dan, and then I'll pass over to Gerhard.
Yes, thank you, Kalina. Well, let me first say this about materials available from the IAASB. And I would first mention, and as participants can readily see, that there are no examples of key audit matters in ISO 701 or in any of the illustrative reports in ISO 700 or the other standards. There was a conscious decision by the IAASB not to provide examples because the fear was that the examples would simply be copied and it would stifle any innovation or creativity by auditors. However, a separate working group has produced a publication. It was actually issued in April of 2015 that provides some examples of how the description of key audit matters would be addressed relating to the requirements in ISO 701. And I would point you to that particular document on the IAASB website. Also, Gerhard mentioned in his comments and in his very excellent slides the examples that had been commented on either by the FRC in the UK, also City Research in the UK had developed some commentary and analysis of some of the auditors' reports that also provided some input and comments on the types of examples and in the description of risks in the UK scenario. The other point that I would make is relating to some of the early adopters in the countries that I mentioned. The IAASB is actually looking to the national standard setters or the regulators in those countries to try to make some of those examples public, or to provide summaries of some of the examples, like the UK FRC has done. But at any rate, these examples are public and sometimes are referred to in some of the publications of the national standard setter or a regulator.
Thank you, Dan. Gerhard, maybe you would like to add some comments.
Yeah, maybe I add some comments. I didn't really understand if you mentioned that, but there is actually in the UK there's right now the so-called Investment Association Auditors Reporting Award. This is an association which every year gives actually prizes to the best examples, and they give awards to auditors about the best CAMs and the best audit reports. So this might be a very good source of finding examples, especially as they benchmark. They benchmark the auditor's report, and as I said, they say this is a good report and this is not so good report. The best source for me right now available is what I mentioned and what Dan mentioned again is, of course, the two publications of the FRC. This is really the best thing what you can do, what you can give, what you can get so far. With respect to or other things where I mentioned the PwC report, I know that probably all of the Big Four and maybe also the other auditors issued insights into the auditors reporting their CAMs. So there is also the Netherlands have issued a report like the FRC report about comparing CAMs and comparing auditor reports. And although I don't have any academic studies right now, I cannot tell you, but I know that there are already some out there. So maybe if you go to Dr. Google, you will find them. With respect to CAMs, that IAASB does not include any samples for CAMs. So we had a big discussion in Austria about should the professional and should we provide samples for CAMs, and Dan mentioned already everything. We finally decided no, don't do it. Although we translated the sample CAMs, what is on the IAASB website, we translated them into German, but so far we have not yet publicized them, so we don't know yet if we will even publicize those, although publicly available samples. But for all the reasons what Dan mentioned, we said no, we will not issue, we will definitely not issue maybe even a statement and standard for Austria how the CAMs should look like. So we said no, go to ISO 701, look at the examples, and what I just mentioned before, be entity specific.
Thank you. Very, very useful. Gerhard, maybe you can continue now and talk about the actions here in Austria that the professional association, the smaller auditors and the regulators, how are you tackling this? You already mentioned some ongoing discussions and implementing the directive, but the practical side, the trainings, what are you going to be planning onwards to make a smoother transition with these new audit reporting standards?
As I said already before, yesterday evening, the new Austrian standard for auditors reporting and the ISOs were endorsed. So, and what we will do, there is the chamber in Austria has a specific entity which is called an academy. We call it an academy, and this academy is responsible for training and also for educating the Austrian profession. And the academy will have seminars. And with respect to auditors reporting, I will have these seminars, and the seminars will be held in like 6 or 7 cities in Austria, and there will be some special seminars starting actually by the end of September about the new auditors report, how this would look like with examples. because of course we have to somehow adjust the auditor's report or amend the auditor's report, as I said before, with respect to some Austrian specifics. Especially also we will issue like a report for certain branches, like for associations and for trusts and so on, because we have to use special wordings in those kind of reports. And of course we have to use reports if there is a supervisory report or if there's not a supervisory report, if it is if it's just a single financial statements or if group financial statements. So all these we will have samples for that, and they will be issued and they will be available on the website of the Austrian Chamber, and they will all also be taught in those kind of seminars, what we're going to have. With respect to the regulator, well, we don't know yet, because the Austrian regulator will start on the 1st of October. So we will see what the Austrian regulator will do, and we have no idea if he will focus, or she, we don't know yet who it will be, if he or she will focus more on the preparer side from the financial statements, or they will focus on the auditor side, on the CAMs, and so we don't know yet. The only thing what we said, of course, is that maybe I did not mention it really, but Dan mentioned it with respect to documentation, and this is also the outcome of the first years in the UK actually, that partners told us when you sit there and think about how the CAM is addressed and what type of CAM, what the risk will be, and then you think about the audit procedures, and then you go to your audit files and you don't find that there's not there what you have written, what you should have been done. So this is the very, very important thing, that actually what the documentation, as Dan said, that really is there, that you have done what you write in the key audit matter. And this is probably what we think, what the regulator will focus, at least in Austria, will focus in the beginning, that what you write in the CAM, have you really done that and have you documented it?
Thank you. Now let me go back to Dan with a follow-up question. Dan, you mentioned already that the AWSB is already approaching, has some plans to develop further resources by talking to regulators and other bodies of early adopters. But can you tell us if there is some ongoing projects about developing more material and resources for this new and revised auditing reporting standards?
Yes, thank you, Kalina. I think I mentioned earlier that when the auditing standards, this package of auditing standards, new and revised, was approved and finalized by the IAASB, the board also agreed to form an implementation working group. It's called the Auditor Reporting Implementation Working Group, and as the former deputy chair and leader of the Auditor Reporting Project, I continue to lead that working group. The objective of the group has been, since its formation and the commencement of activities in early 2015, has been to develop and provide materials in support of education, awareness, and implementation, and make them available on the IAASB website. The slide in my presentation at the very end summarize some of the materials that have been developed and published to date. The working group continues to work and work with IAASB staff to monitor ongoing developments in various countries around the world, not only with up to this point with the early implementation of the standards, but also with any other developments in auditor reporting in any of those countries. And we'll continue to do so and try to summarize developments and provide any feedback or useful input for auditors and for other stakeholders. One document that the working group is in fact working on at the moment is a frequently asked questions document summarizing some of the more frequent implementation questions that have arisen thus far, mostly coming from firms or standard setters through their early analysis of the standards and development of internal guidance and training, but also coming from some of the early adopters. And the working group will be discussing that document with the IAASB at its meeting, September meeting next week in Hong Kong, and hopes to finalize that publication sometime before the end of 2016. That document will continue to be modified and updated as appropriate throughout the course of the early years of implementation, 2017 and 2018. The working group has also identified a number of, I'll call them good practices. Some would say leading practices. Gerhard mentioned a few in his remarks. The working group has tried to capture those, and also will consider making those available in a document on the IAASB website, and again, hopefully by the end of 2016 or early 2017. Then one final point I would mention is, as a part of the finalization and issuance of the standards, the IAASB committed to a formal post-implementation review to be done 2 years after the effective date of the standards. So that would be sometime after the second reporting season in 2017 or 2018. The working group has begun to formulate a plan for that post-implementation review, and that plan likely will be in phases, with a more formal, informal aspect first, to try to capture some early observations from auditors and others about whether the enhanced auditors report is in fact meeting the objectives set out by the IAASB. And then there will be a more formal phase that will be done closer to the second year and following of implementation, with a view toward providing input to the IAASB about any necessary revisions that might be made to the standards, again, to make them to meet the intended purpose of expanding the auditor's report. So I would advise everyone to continue to check the IAASB's website and look for the outcome of discussions of the IAASB on auditor reporting over the next year or two, as we get into the first part of the implementation, and the IAASB discusses its plans for the post-implementation review.
Thank you, Dan. It's good to know that we will have more implementation materials and guidance soon. Before we continue with some of the questions, let me now open the floor for some questions from the field. If some of the countries or participants joining via WebEx or through VC connections would like to ask a question, then I kindly ask them to unmute or to flag.
If I may have a question from Poland, please.
Yes, Waldemar, please go ahead.
A question to Gerhard about the practical communication with clients in relation to the new reporting, and especially key audit matters. How do you communicate with management? How do you communicate with audit committees in relation to key audit matters? In the past, probably the auditor's report was not a problem to discuss with the client, because it was kind of standard. But now I think there is a lot of room for discussion on every single word, sometimes maybe in the CAM. What is your practical experience about this communication?
Okay, what we did already as I mentioned before already, I think we started communication quite early. Actually, what we did is we did some dry runs for 2015. So we took the 2015 report and the 2015 audit and formulated the CAMs and went to them in the audit committee meetings, which were actually in May, June or so. So we started very early. What we did also in this kind of meetings, we gave them a short presentation of the change of the ISA, so that there are the new ISAs, there is the new ISA 701, and what are the requirements and so on. This is really very short. You can do that in 5 or 6 slides. Just there is the change. And also, of course, the most important thing is that this, which Dan mentioned in ISA 260, which requires, of course, and especially for Austria, because the communication with the audit committees in Austria was, I would say, rather weak, we could say. So this has to definitely change and completely change with respect to requirements now. So as I said, we started already in May and June. What we do now is, of course, as I said, the audit committee meetings start now for 2016. So we go to the audit committees now, September, October, November, whenever the meeting is, and tell them that we present what is required under ISA 260 and ISA 600. So we present to them the normal audit plan and everything. And as I said, we start already telling them what might be the CAMs. I mean, of course, you have to state that this is maybe a preliminary, because otherwise we cannot say these will be the CAMs, because in this case we wouldn't have to audit anymore. So we based also on the experience from last year and based what we know about the knowledge of the client, we present already what we expect to be a CAM. What we experienced actually really is there is a difference in the audit committees and in the perception and how audit committees see the whole thing. The difference, what I mean, is in the type of company. If we have really a listed company, which let's say is mostly listed and they don't have a major shareholder or so, the audit committees were actually very, at least in our experience, were very, very open. They were very interested in that stuff. Some of them probably were surprised that we do that now, or that we have to do it. And we told them that you will see now your risks and our perception of this risk. You will see that in the audit report. It will be public, and you will discuss that maybe in the general meeting. And in some of the audit committee, this was not a problem. They say, okay, fine, if it's a requirement, we can deal with that. But on the other hand, there are a couple of listed companies in Austria which we audit where the major shareholder is a family. So it is right, you could almost say it's a family business with some outside shareholders. And in this event, in these cases, we really faced a lot of problems. Where the main shareholder, probably at least in Austria, some of the main shareholders are sitting in the audit committee and sitting in the supervisory board, and from some of them we really got the feedback, no, you don't tell us, no. There was a clear indication, don't even think of doing that. And of course, we have to try to explain to them and say, it's no other possibility. We have to do it. And it's not bad. It's good for the investors. They know you. And we try to, of course, everything what Dan mentioned also, and we bring them examples of the reactions in the UK and so on. But in some instances we heard, I don't care. I don't want that, I don't care. So there is still some education, there has to be some education process what we have to go through. What Kalina mentioned, and this is a criticism what I want to do on our profession in Austria, and this is what, if you have not yet done it in Poland or in the other countries, you should start educating the public. You Kalina mentioned that you should really start educating journalists, that you start educating investors. I mean, at least what our experience is, the UK investor, they are really, really sophisticated. They know what's going on. London is, of course, a different stock exchange. It's a different investor place, and you have different people there. And also the analysts. I mean, when you look at a UK analyst and if you look at an analyst in Austria, this is like day and night. So, and this is, I think, what the Austrian profession really did not do. I mean, we could start now, but I think it's almost too late. Educate the public, educate the people, educate the journalists, go out and tell them there is a big change coming. And you should really look at the report again, because nobody looked at the auditor's report in the past, because it was generic and everybody said, well, it's all the same anyway. You don't tell us anything. Because a modified report for a listed company, oh my God, it didn't happen in Austria. So we always had the final reports. So the only thing what I really can tell you, go out, educate the people. And of course, you have to educate also the supervisory boards and the audit committees. And again, as I said, we started with that in March, April this year already.
Thank you, Gerhard. Any other questions coming from the field? If you want to ask, just unmute your microphones, and we will take the questions.
Kalina, can you hear us from Macedonia?
Hi, everybody. We hear you. Go ahead.
Okay. Thanks for Gerhard and for Dan for the wonderful presentations. We have one question here. It's a thought and a question as well. My belief is that the auditors will be reluctant to disclose more CAMs following the implementation of the new standard, particularly a few years afterwards. What the public oversight and the quality control within professional bodies can do in order to encourage auditors to disclose CAMs, particularly in countries where, as Gerhard explained, the investor public and the general public are not aware too much of the new requirements, and there's a lack of major pressure over auditors to disclose more in their audit reports.
Thank you very much for the question. Let me first ask Dan to provide some comments, and then we'll move on to Gerhard. Dan, over to you.
Yes, thank you, and thank you for the very good question. I would probably address it a couple of ways. One is, in those countries or jurisdictions where there is an established audit regulator or audit inspection scheme, I think there will be the natural incentive for auditors to continue to innovate and to continue to communicate key audit matters and to improve that communication year over year. As you point out, I think the question is open as to whether in those countries or jurisdictions where, as you say, there is not as much either public demand or public awareness of these changes to the auditor's report or the reasons for the changes to the auditor's report. I think it then falls to the auditors somewhat, but also to the national standard setters and others in that country to help to promote the awareness and the education and the acceptance of of this enhanced auditor reporting. That will, in my view, I think will help to drive the continued communication of key audit matters. It starts with in those countries that are following the international standards, the ISAs. There's a requirement if a matter meets the definition of a key audit matter, and if it's a listed entity or otherwise is required to be for CAM to be communicated, there's an expectation that will happen, or there would be a deficiency in terms of applying the standards. But I do think it's important for other parties to be involved in promoting the awareness and the acceptance and the value of the enhanced auditors report to help to continue to drive the innovation and the creativity and the communication in future years. I'd also be interested, Gerhard, in your comments in that regard.
Yes, I mean, first of all, I can only echo what you said. And again, the experience, what we had so far, and continuing what I said before, we had within PwC in Austria, we had the discussion, of course, amongst the audit partners, saying, well, is there really at each of our listed companies right now and then for the pies in the future, is there really, do we have to include really in each case a CAM? And the only answer, what I always say, yes. Because there is definitely, I mean, I cannot imagine that you have a listed company and there is nothing what you really should import and that there is no significant risk in the audit. As you said then, when you go through the definition of a CAM, how it is provided in ISO 701, I cannot imagine that you don't have a group or a listed entity that doesn't have a CAM. I don't, well, it hasn't to be like 6 or 7 for each of them. But 1 or 2, I think this is definitely what you have to find. Although the Austrian profession is also somehow, well, I want to call weird with this respect. We heard already from some other of the big 4 with respect to listed companies that they will have no CAMs because there's nothing to report. And in one case where I heard that, I know this listed entity, and I mean, I really cannot believe that there is no CAM. There is no CAM. But again, it will be, as you said also, Dan, it will also be, of course, at the discretion of the auditor and of the audit firm how they will handle that. But for me personally, there must be a CAM. It's definitely, it cannot be possible to have not a CAM. I cannot imagine that.
And Gerhard, maybe if I could add perhaps one additional point. You mentioned it in your remarks, at least in the UK, the Investment Management Association awards for the auditors' reports. And I'm not aware of any other investor groups in any other countries that are following that type of an approach. But what I would say is, in any country or jurisdiction, once investors and users of the auditor's report start to see this additional communication, the hope and the expectation is that will itself will drive additional interest and drive auditors to continue to provide that communication and to be creative and innovative in the manner and presentation of that communication in future years. So at the end of the day, the enhancements in auditor reporting are intended to provide additional valuable information for users. And I believe it will be the users of the report and the users of the financial statements that ultimately will continue to drive the communication and improvements in the communication of key audit matters in future years.
Yes, I fully agree. I fully agree what you said. Yeah.
Okay, thank you. Let's move on with the other questions that we have received here. Piotr will help me moderate this section. So Piotr, over to you.
Thank you, Kalina. These are a couple of questions that we also received in advance. After these questions, we're also going to open the floor for some current questions from our other participants, so stay tuned. The first question I would address to Dan. We know that under current standard, the materiality number is not really disclosed and is known only to the auditor. Can you elaborate a little bit about the current ongoing debate in that respect and the potential pros and cons for disclosure this materiality or not?
Yes, thank you. And I will comment on this from the perspective of the IAASB, and the possibility of the auditor communicating information about materiality in the auditor's report actually goes all the way back to the IAASB's first public consultation in May of 2011. And the respondents to that consultation actually at that time were not very supportive of the auditor providing information about materiality. There were concerns expressed about how users would react to or interpret materiality amounts without the proper context of how auditors apply materiality or the concept of materiality in the audit, without a better explanation of what planning materiality is and how what benchmarks are used. And that's not to mention getting into the concept of performance materiality. And as Gerhard mentioned, there's really only one firm, even in the UK, where materiality disclosures are required. That is talking about performance materiality in the auditor's report. Now, the requirement in the UK, however, has, I think, attracted the attention of investors and others. And generally speaking, the investor community in the UK has widely accepted and perceives as very valuable the auditor's discussion of materiality, particularly the rationale for how auditors are setting overall materiality or planning materiality, and when there have been changes in materiality year over year, what has contributed to the auditor's judgment about changes in the materiality amount. I believe because of the acceptance of materiality disclosures in the UK, when the IAASB undertakes its planned post-implementation review, there may be another a look again at whether materiality should in fact be required to be disclosed in the auditor's report. And again, any change in that regard would still have to go through the IAASB's due process and public consultation. So we're a ways away from any change at the IAASB in that regard. But I think the experience in the UK, has proven that materiality is something of interest to users and will continue to be of interest.
Thank you, Dan. Another question I would also like to address to both of you. In many countries of our participants of this workshop, the oversight capacity of audit regulators is still being developed. And sometimes it could be that the auditors could be challenged instead of the management regarding the significant matters and risk disclosed in the course of the audit procedures. What would be the best practices that could be implemented by the auditors to manage this type of risk?
Would you like to start, Gerhard?
Okay, yeah. As I said already before, we do not have any experience so far because our regulator we will get on the 1st on the 1st of October, so in a couple of weeks. We had, of course, a quality review scheme before where they somehow, yes, challenged significant risks and how we addressed them and how we arrived at them. But I'm not aware of any real problems what have arisen so far. The best practice is, well, the only thing what I can say here is, of course, we have to look at other countries because in Austria we don't have the experience so far. So we look at the FRC reports, or what we do, of course, in PwC, we look within our reporting group. We also have a kind of global auditors reporting group, and we look here for examples. Yeah.
Thank you. Dan, over to you.
Yes. Well, I can only echo Gerhard's comments. And perhaps say a couple of other things. This, the risk that you mentioned, that in those countries where the audit oversight is less developed, could the auditors be more challenged on the nature of the matters that are being communicated? I suppose that risk does exist, which points to, I think, the importance of the communication, ongoing communication of the auditor with management, and particularly with the audit committee, to be so that all parties to the process are comfortable with the matters that are being communicated. Part of this also speaks to awareness. I've mentioned to a number of groups that the auditors can only do so much themselves in terms of educating users, investors, and other users about the changes in the auditor's report, the objectives of key audit matters, and that some of that education and awareness does need to come from other parties in those countries, standard setters, regulators, and others. But in any communications that the auditor might make, whether it's with those charged with governance, or with if the opportunity exists in communication directly with users, to continue to highlight that key audit matters are the auditor's perspective on matters of significance to the audit. Management's perspective on those matters is already being provided in the financial statements, in the disclosures to the financial statements, and the auditor is referring to those matters. It's essentially, if you're talking about matters of most significance, if it's a complex estimate, or if it's impairment of an asset, if it's a significant transaction, that matter likely only has become a matter of importance in the audit because of the underlying nature and complexity of that matter. And generally speaking, those are the types of matters that generate the most robust disclosure in the financial statements. So any user picking up a set of accounts should be able to see some symmetry between the discussion of key audit matters in the auditor's report and how either management is disclosing those matters in the financial statements, or if it's a regime like the UK where the audit committee or the board is also reporting, some symmetry to the risks or the matters that the audit committee is describing. So it's important that everyone, users in particular, understand the relationship between key audit matters and the disclosures in the financial statements. Key audit matters being the auditor's perspective, the auditor's transparency into the audit. Management provides the perspective and the transparency in the financial statements.
Thank you, Gerhard and Dan. And let me open the floor for the second round of questions from our participants. Are there any questions left from Warsaw or Skopje or maybe other locations? So please go ahead.
Okay, thank you. If there's no more questions, let's wrap up this session. Let me first start by thanking our speakers for the excellent presentations, and also thank you very much for your inputs and your participation in this workshop. Just want to mention a few things. This distance learning event is going to be recorded and made available through the Audit Train of Trainers webpage. So if you would like to revisit it or refer it, I will announce it soon when it is online. A second thing is, let me use this opportunity to advertise the upcoming Audit Train of Trainers workshop here in Vienna, which is scheduled for October 17th and 18th. The invitations and the agendas will be following soon, and this module will be actually module 2, and we will talk about the risk assessment and the audit strategy. I'm looking forward very much to seeing you then and reconnecting since our last meeting. I wish you a pleasant afternoon, and thank you very much again for your participation.